Hi, I'm Yashwant. Welcome to the YASWANTH PALAGHAT show. The theme of our today's episode is financial literacy. For today's episode, we have a guest with us. He's Andrew Stotz from Bangkok, who is a founder of Stotz Academy. Also, he's a host of a podcast named The Worst Investment Ever. Hi, Andrew. I'm good to have you here. How are you doing?
I'm great, and it's great to be on the show and share some of my experience and wisdom that I've gotten over the years and through my podcast.
Yeah, excited to hear from you. So, can you introduce more about yourself to our audience?
Yes, when I grew up in the U.S. and I basically didn't have any money at the time when I was, let's say out of high school. And so I didn't even plan on going to university because I just didn't have the money. But somehow I went to work in factory and some other places. And then eventually I found someone that was able to help me get into university. And I went for one term and then I quit because I thought, I can do this on my own. And then I ended up realizing I needed to get an education, and that education was the key to value. In other words, the higher education I could get, and if I could apply that education, I would increase my value. So I did my undergraduate in finance at Long Beach State in California. Then I did an MBA and I went to work for Pepsi in manufacturing. And then I quit that job after 3 years, what would have been a great corporate career. And I moved to Thailand to teach finance. So I was about 26 and I arrived in Thailand not knowing anything. And I had a job at teaching finance. And then I did that for 1 year. And then I realized the stock market was booming at the time. This was 1993. And so then I decided to become an analyst. And then I built a career as a financial analyst in the stock market for 20 years. And so I set up my own firm. And basically my expertise is definitely in the world of investing.
That's great. So the theme of our today's episode is financial literacy. So what, according to you, is financial literacy?
Literacy is a word that's often used when we talk about books and reading, to be literate. And I think that in this, for our discussion, I think that literacy means to get an understanding, a basic understanding. And if you can build a basic understanding about investing and finance, then I think that you will actually have a lot of benefit. I think that one of the biggest problems that young people face when it comes to investing now is that it's too sexy.
Yeah.
What I mean by that is that everybody is showing that they're winning in their investing, and everybody wants to talk about their winners, and that can distract you from real literacy of really understanding the foundation of investing.
Great. So how important it is to manage a personal finances effectively?
Well, I like to use the example of my mother and father. My dad worked his whole life as a salesman for DuPont, and my mother was a housewife. But they were able to retire at the age of 58 and support themselves for 22 years.
Okay.
To support yourself in retirement for 22 years is very hard. And they were able to do it. And they did it because they understood, and they basically invested and saved very carefully. And they weren't experts in the area. Okay. But to be able to retire, and then to be able to live comfortably during retirement. And then when my father passed away 5 years ago, my mother moved to Thailand to be with me. And when I go through their finances, I can see that she doesn't have to worry about money for the rest of her life. And that really is the ultimate goal. I mean, obviously we want to buy a house, we want to buy a car, but I really want to, influence people around the world and your listeners and your viewers that focus on building your retirement nest egg so that you can be safe and be self-reliant at that time.
That's great. Makes sense. So your thoughts on how important it is to have financial literacy education at school level?
Well, it's interesting because in school, I wasn't taught anything about that.
Yeah.
I studied finance, but I learned about finance in the stock market. I learned about finance in companies, but I can say I never really learned And I would suspect that most people aren't really learning about how to take care of their. And so I would love to see it in the curriculums at the schools. But the truth is, just like I would like to see, really good curriculum about nutrition and understanding, about the dangers of sugar and things like that, it just doesn't seem like it's going to ever get there the way science and, math and language or whatever is in there. So I think really the challenge is, how do you educate yourself in this area? I think you can't, this is such an important area that you can't just rely on the school system for it, I think.
Yeah, true. So while coming to financial literacy, like how investments and savings matter in improving one's, personal finance or financial literacy?
Well, I think it's important also to distinguish between savings and investment. So the savings is what we normally would call putting money in the bank. Now, around the world, the interest rates in the banks are very low. Now, in India, I believe they're higher. And so sometimes we can be seduced to put our money in the bank. Now, if the bank is paying us 5, 6, 7%, that's a really good, return. Now, usually when a bank's paying that high of a return, it's because inflation is also high in the country, right? So generally what we can say about putting money in the bank and saving is that the best case is that you may be able to a little bit outpace inflation. But the reality is, in most cases, you don't. And the best way to think about that is think about a meal that you like. Let's say you like a hamburger, and you know how much that costs today at McDonald's or wherever that place is that you go. In Thailand, I would say a bowl of noodles, maybe some curry. In India, from last time I was there, I had some amazing curry. But let's just say there's a bowl of curry that you get down the street, and you know how much that costs today. Let's just say that costs 100.
Okay.
So now the question is, how much is it going to cost a year from now? And if it's going to cost 105, but your bank account only paid you 4% interest, it means you're going to end up with 104 at the end of that period. And that means that your bank account didn't keep up with inflation. And over time, that can be very destructive. And that's where the idea of investing comes in, because the benefit of investing is that you are trying to invest in things that earn higher than the inflation rate by as much as you possibly can. And so investing is critical for growing your wealth. And I just did a little calculation. Imagine that you're 25 years old today, and let's say that you want to retire when you're 60. That's 35 years you have to invest. And I always try to help young people. I have a course called How to Start Building Your Wealth Investing in the Stock Market. And I wrote it for my nieces that were each, when they were 18, I gave them $3,000 each and helped them open up an investment account in America. And basically what I explained to them is focus on the long term. Let's say you're 25, you're going to retire at 60. That means 35 years you're going to be investing your money. And of course, you're going to live after that. You want to live a good life after your retirement. So we got another 20 years that you'll probably live. So that's 35 plus 20. What we're talking about is 55 years that you need to manage your money. Yeah. So whenever someone comes to me about, I looked at this stock, or I looked at this, I want to make a short-term investment, I just think, focus on the long term. So now let's imagine that you can invest in the stock market. And let's just say that you can earn I'm just going to plug in a number here. Let's say you can earn an 8% return every year on average. Let's say that you put in $1,000 today. That $1,000 is worth about $15,000 35 years from now, when it's time for you to retire. And that's, of course, one of the core foundations of investing, and that is compounding or compound interest.
Yeah.
And I would say there's only about 3 or 4 main investment principles, and one of them is compounding. The second one is think long term.
Okay.
But what I would highlight about this, I think a lot of young people have seen this curve that shows an exponential rise in later years if you invest now. But the problem is most people don't know there's an important part of this calculation that most people, I would say 95% of people who use this chart don't know. And that is, that chart assumes that every bit of income you earn from that investment is reinvested in that investment. Whereas people think I'm going to take passive income from that. No, no, no. It has to be reinvested or else it's a linear line. And so I would say first, the difference between savings and investment. And the second is understand long-term and then understand the compound effect.
Okay. Sure. Like from your answer, like I mean, I got one question. Like, so what do you think the best investment option? I mean, to choose from, like, one side we can pick mutual funds, stock market, and all the stuff, and other side there are cryptocurrencies which are very much trending and which are very much hot nowadays. So, what do you think the best way to go for, or is it good to go on both ends?
So first of all, let's put cryptocurrency aside for just a minute. We're going to come
Okay.
back to that.
Okay.
Let's just look at all the different investment opportunities. Now, one of my investments is a coffee business that I have in Thailand. We have about 100 employees and it's run by my best friend, and he has a management team that's been running it, and he's been running it for 25 years.
Okay.
When COVID happened, when costs of coffee go up and all of that stuff, these guys swing into action and they redesign the business to make sure it's profitable, make sure it's growing. And when you invest in a business, you're investing in a management team that is working their butts off to try to figure out how to deal with the current situation and grow the business, make the products better and the service better. There's nothing in this world that will return you more on average. You know, of course, people get lucky with a lottery ticket. People get lucky sometimes with a crypto, with a piece of art. You can get lucky with anything. You can get lucky with a stock. But just generally, investing in business is the way majority of people in this world get rich. If you look at the richest people in India, the richest people in America, they all built businesses. So the first thing that I would like to explain is this idea of creating wealth. And creating wealth is done through business. And so the point that I would make is that investing in business is the key. Now, you have different ways that you could do it. One is you could buy a private company. Your friend comes up and says, let's make a restaurant together.
Yeah.
That's one way. That would be a private company. But chances are you're not going to get a lot of those opportunities. So that would mean you're going to just be exposed to one company. The second one is just to say, well, I'm going to buy stocks in the stock market. Well, when the stock market's going up, everybody looks like a hero. But that's harder than you might think. Having been picking stocks for 30 years, that's a full-time job. And that brings us to mutual funds. And mutual funds are a tool that would allow an average person to invest in many stocks. And that would take advantage of the next core principle of investing, which is diversification. Okay. So I would say for the average young person, first, build up a portfolio, build up some wealth in a mutual fund that's not too expensive, that owns as many stocks as possible. That's a good starting point. Then you can branch off from that and maybe spend some time picking stocks, have some fun with that. And then let's just talk about crypto. I think crypto is a very fascinating, I could say trend, new technology. And with any new technology, when the car came out, there was thousands of car companies, not that many now. And so a lot of things get washed out. So you have the chance of making huge money, but you also have the chance of losing all your money. So from my perspective, I think if I was a young person at this age, I wouldn't have a problem spending 10, maybe 20% of my overall investment pile playing around with cryptocurrencies. But cryptocurrencies, may or may not work out. Some people get rich from them. Some people lose it all from it. But I wouldn't say to avoid them. I'd just say keep them limited until you really understand, more about them.
Sure. So, I mean, like I'm just age 23 now. So according to my observation, people of my age are confused between assets and liabilities. And mostly they thought of building their dream home at their early 20s. So they want to have things on their own. So they're going into debts and EMIs and all those stuff. So what is your advice on this?
So my advice on debt is try to avoid debt.
Okay.
And I've seen, as an analyst analyzing thousands of companies, debt is the number one risk factor in business. Now, of course, you have the risk factors that okay, your product's not good and you're not good at managing the business. But for operating businesses, their biggest risk is that they bring on too much debt. And if they do, that means eventually the banks can take control of you if things don't go well. Take a look at my coffee business as an example.
Yeah.
We don't have much debt. We financed it mainly with our own money.
Okay.
So the fact is that nobody can really shut us down if we're struggling. But if we're struggling and we can't make the payments on the debt, then the banks could shut us down by saying they're going to file bankruptcy and say we can't pay the debt. So getting rid of debt in business and in personal life can really bring you a lot of freedom. Now, in the world of finance, we say, well, bring on a little bit of debt. It can benefit you in certain ways. And yes, theoretically, I've taught that myself and all that. But I would just say that debt is probably the most dangerous thing that you can go into. And the other thing is that, remember, the difference between an asset and a liability is an asset is something either tangible or intangible, meaning something like a machine or a computer, or intangible, such as a system, a software, something like that, that brings you future benefit. But a liability never brings you future benefit. And that's, so as far as now, there is one case in America that I know very well. The government gives a lot of incentive to borrow money for a house. And if the government gives a lot of incentive of tax breaks and things like that, sometimes it makes sense to do that. But I would also say that your objective really needs to be whatever your salary is that you're making every month. Let's just say it's 100,000. Is that you want to make sure that your spending is deeply below it, because there's an important message here. I've already told you that the way that people create wealth in the world is through business. Yeah. The majority of the richest people in the world, look at Tata as an example in India as an example where, always it's coming from business. But there is another secret weapon of how to create wealth. And that is if you can live deeply below your salary. So if your salary is 100,000 and you're spending 90,000, you are creating wealth of 10,000 that you can then either save or invest. But if your salary is 100,000 and you're spending 40,000, you're creating wealth every month of 60,000. So in the past, we would say, be an entrepreneur if you want to get rich. But now I say, make a great salary and keep your costs super low, and you can create wealth over time.
True. So what do you think the difference between financial literacy and being financially independent?
So financial literacy is understanding, but being financially independent means that you've actually implemented what you understand. Okay. There's a lot of people out there that have understanding, but they're not implementing it. And so part of what I try to do in courses that I teach and in the work that I do with people is say, how do we get started implementing? And there's some little things that I would say. The first one is that start small. If you're going to say, okay, I'm listening to what Andrew says and I want to invest in a mutual fund. Look around, do some research, come upon the one that you think is the best and ask them, what's the minimum that I can put in? And use that minimum as a tool. I use it as like a mental tool to overcome the overwhelming feeling like, oh, it's just a mistake or I'm not sure. When you go in at the minimum, it kind of helps you to just take the action and then think about it, learn about it as you go through it. So that's a big piece of advice, is start with the minimum no matter what it is that you're doing until you learn more about it.
Right. So your take on, do really millennials lack financial literacy?
Yeah, truthfully, I think that millennials lack financial literacy just as much as my generation lacked financial literacy. Okay. A lot of times we say, oh, millennials don't have this, so they don't have that. But, my parents said that about my generation. And it's just natural that as people get older, they say, oh, that wasn't the way we did it. So I wouldn't say that millennials are any different than prior generations. Okay. I know in some families, you don't talk about money an investment. You know, you don't talk to your parents about it. In some families, you know, it's a lot of things are the same. So I would say that, you know, we need to learn more about it, because if you go back to the question you asked me before about the difference between financial literacy and financial independence, and I said it's about implementing, but the point is that that needs to be the goal, and to get there, it takes a lot of work. And what does it mean to be financially independent? For me, it means that I'm generating enough of my income. I'm generating income from my investments that can cover my operating expenses in my life. And that's not an easy place to get to unless you keep your expenses super low. But if you want to live just a good, normal life, it requires a lot more money than you think.
Sure. So what do you think are the common myths that are surrounded over financial literacy?
Well, I think the biggest one, and it's being perpetuated on the internet, is that there's certain ways that people are getting rich quick. And there's secrets to that, and there's hacks to that. And that's a bunch of crap. In most cases, the people that are teaching either actually aren't rich, okay, or they were lucky. And then they created something that was based upon what they did, and they got lucky. They made some good money out of their trades in crypto or whatever that was. And then they may make a course, they may form their opinion. But the fact is that, and this is something that I didn't think about when I was your age, and that is that luck is underlying everything in life. You know, you could just walk to the grocery store, and if you had just walked a little bit the other way, you could have gotten hit by a car, but you went this way. It's like luck is everywhere in life. And so I would say my number one thing that I would convey to your listeners is, if anybody talks about getting rich in the stock market or getting rich from investing, my first point is, don't believe them. And that's the job of an analyst. What I love about being a financial analyst, and I teach in another class I teach, which is the valuation masterclass, is start from this point. Believe no one. Believe nothing. You have to see proof and evidence of something before you believe it. And the second thing is that, okay, if you get evidence that somebody is actually, you know, made a lot of money in crypto or whatever, now the second thing I would say is that recognize the role of luck, and try to say that this could have been won, or this could have been gained through luck. And what proof do I have? Even Warren Buffett, what proof do we have? Is it possible that Warren Buffett got rich because of luck? Well, the answer to that is yes, because we know that luck exists, yeah, underlying whole life, and it's possible. But it's very hard to see, because you see, the winners in this world are the ones that we interview and we listen to and all of that. But we know them after they've won, and we make up a story that makes sense. And I'm not here saying that Warren Buffett didn't get his money by skill, but I am here to say it is possible that he got his money because of luck. And proving the difference between luck and skill is very difficult. So at least recognize, number one, believe no one, believe nothing, question it yourself. And number two, don't discount the role of luck in all of the outcomes that we face in our lives.
Great to hear from you then. So if people want to reach you for the doubts on financial education, financial literacy, how can they reach you?
So the best way to reach me is to go to my worstinvestmentever.com, which is where I do my podcast. Listen to some of the podcasts so you can learn. And I would say also in there, I have an about page, and you can email me directly there, or you can, there'll be a pop-up that will be the lessons that I've learned.
Okay.
Also, I have this course called How to Start Building Your Wealth Investing in the Stock Market. And it's really for absolute beginners. And so I would say that's how you can reach out to me, and I'm happy to share.
Sure, I will add all those links in the description. Yeah. And any parting words from your end to our audience?
I think that the best thing I've ever heard is the idea that investing is a marathon, not a sprint. And what I've learned through more than 350 episodes of my podcast and my 30-year career in finance is that risk management is much more important than what I thought it was at your age. So go shoot for the moon, try to grow your portfolio, try to learn how to invest and all that. But listen to old guys like me when we say, reduce your risk.
True. Thank you so much, Andrew, for having in my show. So we have got some really useful information and valuable information too. So yeah, once again, thank you for accepting my invitation.
Yes, my pleasure.
Yep. So yeah, thank you everyone for watching this. I hope it helps everyone who are watching this video. And also if you found insightful and useful, please like and share this in your network. Thank you. Thank you for watching this.